then introducing this 70-30 mix of BTC and ETH has an extremely positive impact on the overall Sharpe ratio of the portfolio, up to a 20% allocation to crypto. So that would be like 13 BTC, 6 ETH, something like that. And then the remaining 80% balance is at a 60-40 ratio of stocks to bonds. So 20 vol is not that high for a young, healthy working adult. So, maybe some of these allocations will surprise us once the ETH ETFs come out. But historically it's been, half BTC and half other, and we're providing the other through these liquid token strategies.
All right, guys, bang, bang. Today we have Matthew Sigel. He is the head of digital assets research and a portfolio manager at VanEck. VanEck is a massive financial firm. They have $100 billion in assets. About $2 billion of that or so is in crypto. They have been all over this industry. They do tons of research. They continue to look at various valuation methodologies. And I've even left a special treat for all of you at the end of this episode. In this conversation, Matthew and I talk about Bitcoin, Ethereum, miners, how different countries are interacting with this industry, what you can look at from a regulation standpoint, how VanEck is talking to their clients today about portfolio construction, where various opportunities exist, and of course, how crypto and politics are all intersecting with each other. This conversation is packed with insights. Matthew did a fantastic job educating me. I think all of you will drastically appreciate all of the things we talked about. So here's my conversation with Matthew. All right, guys, bang, bang. I've got Matthew here. I thought a great place to start the conversation would be Bitcoin is this sovereign tool that Bitcoiners have been yelling about forever. Now we're starting to see countries do this. We're seeing El Salvador, a number of others. At VanEck, you guys have $100 billion in assets. You guys are one of the largest asset managers in the world. And one of the advantages to that is that you actually have teams that don't know anything about crypto. They're not worried about Bitcoin. And so you can go talk to those teams. For example, there's a VanEck bond team that is focused on some of these other countries. And so talk a little bit about this idea of like Bitcoin infiltrating these countries, how they're being used, and then maybe the intelligence that you can gather by talking to the bond teams and others at VanEck that are specializing in what's happening in these countries.
So we are a macro shop. And one of the key overriding themes that's been in place since the firm was founded, 7 decades ago is how to protect wealth in a world of money printing and dollar debasement. And, we're seeing that quite obviously today in the US with, 7% budget deficits and full employment. And we think we're going to look back on this situation as something that was absurd in hindsight, that cannot last. So we have this DNA of gold and gold mining equities. Jan VanEck was, when Bitcoin came around, recognized that it had the potential to disrupt gold. And he wanted to hedge against the possibility of a significant amount of our revenues, underperforming. And I think that's really what a lot of traditional financial system faces, is this huge innovator's dilemma when it comes to Bitcoin and digital assets. And we can observe that at the country level as well, right? So if you look at Great financial crisis, the buildup in debt happened on consumer balance sheets and corporate balance sheets. And that was where the blow up was in the mortgage market, right? This time around, the debt has built up at the sovereign level, particularly G7. So at any given point, there are, call it 5% of the world economy that is in default on their sovereign debt, and they go to the IMF, or the IMF comes to them, offering a bailout. And in return for that bailout, there's all these conditions, and what we miss as Americans, I think, is that it introduces a lot of political polarization into those countries where who's ever in power is incentivized to strike that deal with the IMF, but then in return, they give up a little bit of their sovereignty. And the opposing party in those countries is like, hey, hold on, don't do that. You're giving up our sovereignty. It's a very convenient wedge issue. And Bitcoin can kind of emerge as this common ground within those countries. So El Salvador was the most notable example of that, where they're really using their Bitcoin policy as a negotiating tool against the IMF. One of our core theses, since the 3 years that I've joined VanEck, is that an increasing number of countries would be faced with that decision and choose Bitcoin. And this year, 2024, we've had 3 additional countries announce that they are mining Bitcoin with government power. So those countries, Kenya, Ethiopia, and Argentina, now join El Salvador, Oman, Bhutan, and the UAE. Each time the investment is getting bigger, the countries that are doing it are getting bigger, and eventually some G7 country is going to do this. But to answer your direct question, we have this emerging markets fixed income team, which fits into that overarching theme of how to protect yourself against dollar debasement and Fed money printing. Emerging markets generally have run much more orthodox monetary policies. And as a result, their dollar-denominated bonds have outperformed developed market denominated bonds over long periods of time now. And even the local currency EM bonds are, over the last year, starting to outperform dollar-denominated bonds. So the performance of the asset class has been quite strong, and we think it's for the same thematic reasons that we prefer Bitcoin. And it's been profitable to work alongside that team, keeping up to date on the news flow, the internal politics, the monetary policy tweaks within some of these frontier countries. And they've been able to buy some of the sovereign debt in El Salvador, in Ethiopia, and make some money off it. So Jan is quite collaborative in bringing the various portfolio management teams together twice a week. Everyone presents, everyone discusses, and we've gotten some profitable synergies from that.
What is the difference between these countries, buying Bitcoin, which El Salvador did, and I think got a ton of fanfare for it? Very obvious what that means, right? In terms of, hey, we took our local currency or dollars and we purchased Bitcoin, we now hold the Bitcoin somewhere, versus mining Bitcoin. And when you start saying like, we're using government power, I think it becomes a little bit more opaque. Like, is the government mining? Are they providing power and they're just getting paid as a power provider? It's still kind of almost like Bitcoin tangential, right? But how do you guys look at it? Is it that's the first step and it kind of breaks the seal and then it allows them to go do other things, or is that good enough? Like, hey, we just want countries, if we see them start to mine, then they're in the Bitcoin game, and if they never go buy Bitcoin directly, that's okay too. Or just talk a little bit about the difference of like buying Bitcoin for like the country's balance sheet versus maybe just mining or kind of toe dipping in some people's eyes.
At this point, we are so early still in the evolution of the entire digital assets class, 2 trillion out of 250 trillion in global equities and bonds. So any large pool of capital that is diverting resources towards Bitcoin innovation, mining, or buying, we think is a positive. But it's clearly most attractive, meaning Bitcoin mining is clearly most attractive on the first order for countries with a lot of energy and not enough hard currency to properly monetize that energy. So, to use, you can have as much energy as you can consume at the top of the volcano, but if you literally can't afford the high voltage transmission cables to bring that power to where the demand is, then it is wasted or stranded, and there's going to be a lot of economic incentive to bring in Bitcoin miners because the capital requirement is so much lower than an entire battery set or these transmission infrastructure. So that's where the first steps have been taken. I think there's still a lot of pushback at the central bank level, the BIS, who wants to do their own coin. So we haven't yet seen accumulation by a central bank. That's not in my bull case for half a decade, if not more. First step is getting the circular economy going. Once you're mining Bitcoin, then you're going to find some use for those sats besides just selling them. Although the killer app for these emerging and frontier countries is access to hard currency. That's why Kenya is doing it. They also have an IMF deal that they need to strike, and Bitcoin can provide very handy hard currency while they negotiate the details.
Let's talk a little bit more about these IMF deals. Like, what is the IMF trying to accomplish? What are the countries trying to accomplish in these negotiations? And were these deals previously struck out of pure necessity? Like the IMF was kind of the only game in town, and so Bitcoin really is like negotiating leverage?
If we're on a dollar debt standard, right, not the bearer asset, but the debt-based standard, which is pretty much what we've been on since we went off the gold standard, then the incumbents are going to be incentivized to keep that train rolling. Issue more debt means more fees. The U.S. dollar is the reserve currency for energy purchases. So countries that don't have a functioning local currency really do need that hard currency if they want to operate the industrial part of their economy. So there are a lot of entrenched interests in keeping, rolling over the debt pretty much, even if it becomes unproductive and zombie-like, and let the next administration, write it down to zero and start again. So Bitcoin introduces this political compromise that sometimes the both parties or whoever's in the opposition in this financially challenged country can agree on, and it pisses off the IMF enough that maybe it changes the terms of the deal a little bit.
Got it. And when these countries are getting the Bitcoin, do we know what they're doing with it? Like El Salvador seems to just be buying and holding. These countries that are mining, are they also just holding the Bitcoin, or are they trying to do stuff with it?
Right now, it's being done in an opaque fashion via state-owned companies. So in the UAE, it's a JV between the government-owned utility and Marathon. I really don't know what they're doing with those coins, but it's not transparent. Yeah.
And then when the ETFs got approved, obviously VanEck got one of the Bitcoin spot ETFs. There's many others that have come out now. One of the most interesting things to me was an ETF would now provide a sovereign wealth fund or a nation state the ability to essentially get long the Bitcoin price without taking ownership or sovereignty of the asset. And, again, El Salvador does it. I think most people in the United States are like, where's El Salvador on the map? Doesn't mean that should be that way, but I just think that people look at it and they're like, hey, it's a small country. They don't have a native currency. It's not really that big of a deal that they've bought this Bitcoin and they're taking control of it from a threat to the United States. But if all of a sudden some other countries began to buy Bitcoin and take self-custody of that Bitcoin, I think there would be a lot more concerns. People would have a lot more questions, et cetera. And so to one degree, Bitcoin's been too small. On another side, well, maybe I don't want the geopolitical conversation and kind of the controversy of actually taking self-custody of the Bitcoin. Oh, here's this ETF that comes along. Now I can get long the price, but I don't actually have to take control of the Bitcoin. And so do you think that those tools will unlock some of this nation state capital and kind of sovereign wealth fund capital? Or does that sound like a nice theory, but in practice, they're not really kind of going through that evaluation process?
I think it will. I think that for developed countries that are in the throes of this kind of climate change mania, like a country like Norway, one of the largest sovereign wealth funds in the world, I think it's unlikely they would be mining Bitcoin directly with energy that could otherwise going and be used for Norwegians' washing machines. That's what they'll say. They have a functioning financial system, not too many worries about custody or censorship. So for them, the ETF would unlock the speculative characteristics of Bitcoin, and they'd be like, I'll pass on the self-custody, just no need. And then it's for countries that have a lot of energy that's not being monetized, where the political regime is very volatile and the banking system doesn't function very well. Again, that's like a pretty good percentage of world economy, up to 5%. They want the utility and the speculative characteristics. So they would choose self-custody. And IMF, the BIS, they're concerned, I think, more with the latter, these countries that need to roll over debt and are incentivized to collaborate with the IMF. And IMF continues to write warnings to countries not to do that. And it happened with Pakistan. In Pakistan's bailout, Pakistan agreed to tax crypto, even though crypto's illegal in Pakistan, because IMF told them to put that in the communique, and that's how they got their billions.
It's interesting in Pakistan when they made it illegal, adoption went up, and I'm not an expert on Pakistan, but I believe that there are 4 kind of regions of Pakistan and almost operate as like states, from my understanding. And in one of those, the more localized government or regional government actually capitulated. And they said, hey, we know that the national government is saying that this is illegal, that we don't want this to happen. There's some bottoms up adoption. Actually, you could see the adoption numbers across the country had gone up. But then this one of the 4 regions actually said, we're going to participate. And it reminds me a lot of in the United States, kind of this difference between the federal and state governments. And we've seen a difference of opinion in some states are very, pro Bitcoin and cryptocurrencies. Some are anti. And then at the federal level, we're also seeing some standoffs in terms of how the state of Texas may treat this stuff versus the federal government. And so if it happens in Pakistan and it happens in the United States, you have to imagine this is something that's going to get exported to every country around the world, and they're going to have to struggle with this, who's in charge and what is our position on these assets going to be.
Yeah, and it as you observe, it bubbles up from the bottom up, local communities, retail investors. I remember when I first got involved really deeply, 2017, and my colleagues, I was at an investment bank and a lot of discussion, not much buying going on. And my colleagues, I came back from this roadshow. I was like, my taxi drivers are talking about this. They're like, that's a bearish sign when the taxi driver starts talking about it. I was like, no, you have it inverted. This is a retail asset that's meant to take power away from the top. Like, you want your taxi drivers talking about this. So yeah, I agree with you.
Yeah. When we look at the miners, the United States has been a big winner in mining since China banned Bitcoin in 2020 or 2021, I guess it was. And in that shift, I think we went from 65% of hash rate in China to today there's about 35%, give or take, depending on how you measure and on what day. And about 10% of that is in the state of Texas alone. Talk about the publicly traded miners, many of which are based in the United States. They've used a lot of debt, a lot of these, ATMs to drive capital into their businesses. They've grown very, very quickly. There's days where I talk to very smart investors and they're like, I'm long the miners and I see a lot of opportunity there. And then there's, in the same day, I could talk to another smart investor and they're like, they're all, zeros, and we just don't see how anyone can drive a return by buying these miners. And so we're sitting it out. How do you all evaluate kind of that part of the market and, allocating capital there versus maybe just buying Bitcoin or some other asset?
So we do have one strategy that owns Bitcoin miners, and that's why VanEck shows up as a front page shareholder for basically all these firms. It's an ETF that buys pure plays exposed to digital assets. So it's Coinbase, MicroStrategy, and a number of the Bitcoin miners. The publicly traded Bitcoin miners now control roughly a third of the global hash rate, and that's an all-time high. The largest Bitcoin miner in the world went public this year in Abu Dhabi. But these stocks have been, pretty bad underperformers this year. And I think there's some structural reasons for that and some cyclical reasons. Cyclical reasons are kind of easy. Bitcoin halving, revenues get cut in half. And at the same time, this AI narrative comes in. And while there are a lot of synergies between Bitcoin miners and AI, and we can talk about that, and there's been accelerating number of pivots into AI just in the last month, these companies haven't really gotten the boost from the AI narrative yet. And meanwhile, although their debt levels are much lower than they were, 3 or 4 years ago, they have been diluting the crap out of shareholders, just constant share issuance. So it's really hard to outperform Bitcoin without a very steady, unchanging balance sheet strategy. And none of the miners have been able to do that because the price has been so volatile and they're so tempted in the upcycle to keep up with that hash rate. And the mining machines are depreciating so quickly. Like the temptation to just spend is very high. So I think those are the kind of the structural and the cyclical reasons why only 2 of the publicly traded Bitcoin miners are up on the year and everyone else is down, and BTC's up 70%.
Yeah, it's very interesting to watch kind of that challenge. And also AI is now starting to kind of come in, right? If you really think of a Bitcoin miner, they're providing infrastructure. It's a beautiful model in Bitcoin because you don't need a sales team. You have persistent demand, et cetera. But we do see a number of the miners saying, well, maybe we're not just a Bitcoin miner, we're kind of an advanced computing business. How do you all look at the crossover between Bitcoin mining and some of the AI stuff? And is that a positive strategy, or do you think that those companies may not do so well?
Today's episode is brought to you by Espresso, the maker of the world's thinnest portable display. Now listen up. If you're like me, you feel like you are at a command center when you sit down at your desk. I got a gazillion tabs open and different windows for different activities. There's my web browser, my text messages, I have Slack open, and I got a Notes app. I normally work on a desktop and it can be very, very productive. But everything falls apart the second I leave my desk. If I'm traveling, if I go to a coffee shop to do some work, or just want to work from the kitchen table, my laptop doesn't have enough screen space. I lose my command center and my productivity falls off a cliff. It's a major problem. But this is where Espresso comes in. They have a portable screen that is so beautiful that you think Steve Jobs came back from the dead to create it. The thing is incredibly light, it comes with a nice stand, and the user interface is so easy that I figured out how to do it in less than 3 minutes. If you listen to this podcast, you know that's not an easy feat. So the Espresso team and I, we became friends. I got to know them because I really like the product. And those screens, they now want to offer them to any fan of the podcast. So we struck a little deal. Here's how it works. Anyone who listens to this podcast can go to us.espress.so, or if that's too confusing, just go click the link in the description. If you go to Espresso's website, they've got a brand new offer there sitting for you. You get a little discount and you'll get a beautiful screen. Trust me, I use mine every day. You'll love the Espresso screen and I think it'll make you more productive. Go check them out today by clicking on the link in the description.
I think it's a positive strategy. As you observed, the hash rate movement out of China happened so fast. The same things happened out of Kazakhstan. The publicly traded Bitcoin miners, when you read their conference call transcripts, they are saying very clearly the marginal investment opportunity is no longer in Texas because there's higher competition from AI infrastructure that wants to suck on that same power. So some number of these miners will be able to monetize that power. We saw it most notably yesterday with CoreWeave making a bid for Core Scientific. Stock's up 50%. Core Scientific had done an excellent job of giving the math around how the value of their installed power agreements is higher than the market cap of the stock. That was like a month ago. Stock started to work. CoreWeave strikes this 10-year, $3 billion deal, and now this thing might get taken out and turned into an AI producer. But the number of miners that will be able to execute on that, because as you observed, they don't have the sales force, they don't have the expertise. A lot of times the Bitcoin miners they're in areas that are rich in power, but not necessarily with super fast connectivity, which you also need. So there's a lot of value added CapEx that would have to go into it. I think it's going to be very stock specific. And in the meantime, the Texas focused Bitcoin miners now have to look at Argentina, in the Middle East. Like they need to find new geographies. That takes skill, money, and various expense as well.
Now, $100 billion in assets approximately at VanEck. About $2 billion of that is in Bitcoin and cryptocurrency. You all have a lot of clients all around the world. with many different goals, many different constraints, many different perspectives on how to allocate capital. I know that you all have done a lot of work on how to allocate capital to Bitcoin, crypto, digital assets. What is the current thinking there around portfolio construction, how these assets interact with traditional assets, and just kind of what you guys are talking to clients about?
So those views are evolving now that it appears that spot Ethereum ETFs will trade in the market. But our historical recommendation is that clients put 1 to 5% of their portfolio into digital assets, that Bitcoin deserves roughly half of that allocation, and the other half should go into liquid token strategies that include other tokens. Now, with the news about Ethereum, we ran some new numbers around what would be the ideal mix of BTC and Ethereum in a portfolio, maximizing for Sharpe ratio and the volatility adjusted return. And when you do that, it's a 70-30 mix, 70% Bitcoin, 30% Ethereum. And we also ran some new data exercises to determine how big can an investor get with that digital assets allocation. Maybe they have a high risk tolerance and they're willing to go above that 5% limit. And we found some surprising things, actually. For investors who are willing to stomach a 20% volatility in their core portfolio, and think of that 60-40 portfolio as roughly half that, then introducing this 70-30 mix of BTC and ETH has an extremely positive impact on the overall Sharpe ratio of the portfolio, up to a 20% allocation to crypto. So that would be like 13 BTC, 6 ETH, something like that. And then the remaining 80% balance is at a 60-40 ratio of stocks to bonds. So 20 vol is not that high for a young, healthy working adult. So, maybe some of these allocations will surprise us once the ETH ETFs come out. But historically, it's been half BTC and half other, and we're providing the other through these liquid token strategies. Got it.
And when you're talking about those percentages, what about rebalancing? Because one of the interesting things about crypto is it's so asymmetric. So if you say 1 to 5%, and let's say that somebody went and they did that last year, that 1 to 5% now literally could be 2 or 3 to 10 or 15, depending on what assets they bought, how they allocated, the exact timing, et cetera. And so 1 to 5% sounds prudent. If that grows to 15%, are you seeing clients want to rebalance? Are you saying, hey, maybe that's a good idea? Or is this such an asymmetric asset and you actually want to let the winners run and kind of it's a set it and forget it type allocation?
I think fiduciaries are going to have a lot of choices to make on that, and you're going to see a range of options. I heard you on CNBC kind of warning that inflows can turn to outflows when you're talking about these systematic portfolio allocators. And we manage some model portfolios that include equities, bonds, and crypto. The crypto allocation is around 5%, and the portfolio manager on that strategy took some Bitcoin ran to 7%, and he took some profits right after the post ETF run to bring it down into the 4s in line. So that decision is made kind of ad hoc by the PM. Generally, I think quarterly is a good rule of thumb.
And in these kind of decisions, how does regulation play into it? Right. So one of the things that I find fascinating is you can go and you can look at the miners. You can go look at Bitcoin ETF. Maybe there's going to be this Ethereum ETF coming shortly. As these assets continue to come to the market and people begin allocating, it almost feels like regulators are becoming looser with their approvals. As they become looser with the approvals, there will be more choice. And so is there a world where, hey, I allocated to the Bitcoin ETF, but that was 100% of what I was going to allocate. Now here comes the Ethereum ETF. I actually should roll some of my Bitcoin investment because it was 100% of my digital asset allocation to the next asset that gets approved. And then when Solana gets approved, or name your next asset, we'll eventually see people not put net new dollars in, but it's almost like a diversification as these assets are getting approved in the US? Or should we expect people allocate to Bitcoin and then net new dollars are going to come in for this next thing? And I think about almost this like wealth effect that we saw in the coins in, outside of the regulated traditional stock markets. Is that going to get repeated here, in kind of these ETFs?
So putting aside the regulatory piece to answer the question, I would say that when you look at who bought the Bitcoin ETFs, one thing that struck me was hedge funds own the same amount as RIAs. Okay, RIAs manage 10 times the assets of hedge funds. When we look at the 13Fs in 6 months, a year, and 3 years, in my opinion, there is no way that those ratios are going to be equal. It's going to be RIAs just pulling ahead and growing faster. And some of them will diversify into Ethereum or whatever is next, but the overall pie will be growing. And I think, as you observe, like the way this asset class works is first you get a Bitcoin bull market, a lot of market cap is generated, paper wealth, some percentage of that gets tempted to speculate into newer stuff. And the newer stuff is less liquid. So if you put the same amount of money into it, the price return is multiples. And that's one reason why now I'll get to the regulation piece. I'm not terribly optimistic there's going to be a ton of ETF choices in the US, partially for that reason. But most specifically because there needs to be a regulated futures market, and the CME is not going to list Solana futures till after the election, would be my guess.
How far down the stack do you think that the US market will eventually go? And so there's this idea of like depth, right? If you go to CoinMarketCap, okay, Bitcoin is kind of first, got it. Ethereum is second. I think there's like 20,000 that are listed. I don't expect the 20,000th to get listed, but should we think about it as like the top 10, the top 15, the top 100? And along that, will we maybe skip some assets, right? Obviously, there's not going to be, or most likely, a USDC or a USDT ETF. Doesn't really see like there's.
Although I saw a new money market fund ETF just launched, first of its kind. So you never know.
So maybe, yeah. Right? But
I hear your point, though.
Dogecoin, are regulators going to approve it? On one hand, you're like, that seems crazy. On the other hand, if the people want it and it fits within the rules, can they really stop it? Right? And so how do you just think about like how far down the list do we go? And also, will they kind of play, winner picker in terms of skipping over some of the assets as they go down the list?
So for ETFs specifically, you need to know if the underlying asset is security or commodity, because that determines what type of filing you make. So a large number of these assets, the government still thinks that they're securities. Maybe the crypto ecosystem disagrees, but anyway, there's uncertainty, and you won't be able to get an ETF on those for some amount of time until that situation is clarified. We can look at other markets where there is clarity, like Germany, and they have approved roughly like the top 50 assets are available if someone wants to put in the work to make an ETF on it. The regulator has to understand those assets, and you need to get this confluence of issuer support. So someone like a VanEck is like, yeah, we're bullish on this asset. Let's make an ETF. Then you have to have customer demand, where our sales team goes out and is like, who wants to actually buy this? Anyone? And then you have to have counterparties that are willing to support the infrastructure required. Regulated futures market would be one. So I do think there will be assets that are skipped because they can't tick all those three boxes. And I think once there's clarity on what specifically is a security versus commodity, then we'll start going down the list of the top 50, not we, VanEck, but like the industry people.
Yeah. Yeah. And it's interesting, I guess, the customer demand may be the easier thing to understand because you can look at the market caps of the crypto assets. You can see that, people are buying it and it's increasing, et cetera. The issuers, I tend to think, but you guys are experts, not me, they kind of follow the customer demand? Like if the customers want something, the issuers most likely are going to show up. Someone
maybe. Our motto is like intelligently designed investment products, and so if a bunch of dumb people want some ETF, we will, we will say, well, we don't like that idea.
Yeah,
so,
which makes sense, right? But if you guys don't do it, somebody else will do it, right? Like the economic incentive is there is if the customer wants it, somebody's going to come and provide them the access. It's that third bucket though that I think is like the big question, and that feels like the bucket where there's still kind of like the old school Wall Street perspective on should we provide support, should we not, is going to really come into play and maybe be the gating factor.
Yeah, because you want our firm's been around for 7 decades. We don't launch a ETF and then expect to close it within 2 years. And the history of this asset class with its volatility is that you need to pick and choose carefully on which assets are going to have staying power. The top 10 assets from 2017 look nothing like the top 10 assets from 2024.
Mm-hmm. Now, what about the other crypto companies that are either growth stage in the private market or now public? So Coinbase obviously is probably the big one that is in the public market. It's not a miner. It's not a direct crypto asset. Seems to have garnered quite a bit of attention. People are allocating capital there. But there's also a number of companies that are trying to get into the public markets. Circle and others have at least announced or are rumored to have be planning these IPOs. And so is this a game where this industry is not only maturing because of ETFs, but we should also expect many more companies to come into the public markets throughout kind of the next 24 months or so?
Maybe 24 months, yes. I don't think 6 months. So Exodus, EXOD, this is a micro cap that has done very well. Crypto wallet, they tried to uplist. SEC blocked it at the last minute. Galaxy's been trying to move over to the NASDAQ, can't do it. No sign of Circle. Now they have turned around the market share losses, so I think the fundamental case is better. So where's the IPO? I don't think the SEC wants to approve these. I don't think we're going to see them until after the election, and then kind of reevaluate what the next administration is saying. Yeah,
and you have referenced the election a number of times. Is the thought process that there will be a new SEC administration in there post-election, regardless of who wins? Or is it if Trump wins, it changes? If Biden wins, then it stays? Like, how are you guys thinking about the implications of the election specifically?
Yeah, in our 2024 predictions piece last December, we said Trump's going to win this election. Still think that to be the case, and then he will change the SEC chair. I know there's some debate around how easy that is to do, but we think it'll get done. If Biden wins, I don't have a prediction because the entire thought process behind their SEC strategy has been illogical. So it's hard to guess.
Yeah. And then there's other things regulation-wise that maybe aren't explicitly like CFTC or SEC oversight. We've seen, many legislative pieces put forward. Obviously, those organizations will have a hand in, providing feedback, maybe enforcing the rules, et cetera. But politicians, kind of in the traditional sense in Congress and Senate, are starting to have much more influence, starting to be much more involved in the process that is directly impacting crypto. 12 months ago, there was definitely some politicians that were saying, hey, this is important. We should be ahead of this. It feels like there's a lot more now. We saw, even in the Democratic Party, a number of them kind of break from the Democratic Party in some of these recent votes. And so is it a thing of just like an idea's time has come, politicians don't want to be on the wrong side of history, and we should expect more and more of them to become kind of pro-crypto over time? Or is there something else going on?
Yeah, the demographic story, I think, is very simple. The older you are, the less optimistic you are about this asset class because of a understanding gap. And the crypto super PAC raising $125 million, that is the largest industry-specific super PAC. It's twice the size of the American Israel PAC, which is renowned. So it's bigger than Trump's re-election PAC. Think about that. This is a guy who I'm sure looked at it and was like, these guys are raising more money than me. I want part of that. So I think it's demographics and money talks.
Yeah. And what do you think is happening in those conversations? Is it just money, or is there some sort of pitch that these politicians are sympathetic to?
the pitch is easy. It's a pitch for innovation and growth, and like one side, doesn't want that, at least by their policies. It becomes clear, this degrowth movement. So I think the pitch for young people is very simple. Let entrepreneurs innovate. Let technology disintermediate big tech, who are printing supernormal margins because they're arms of the state right now. The state censors the content that big tech serves you, and crypto is a way to break free of that and grow. I think that story resonates with young people.
Yeah. You have a very interesting background. You were at AllianceBernstein. You worked very closely with Cathie Wood while she was there before she started ARK. You all not only worked together, but also it was during a time where there's some chaos in markets. I think you worked there during the global financial crisis. Talk a little bit about that experience, both going through the global financial crisis, but working with Cathie and maybe some of the things that you learned.
So I started my career as a journalist covering finance at Bloomberg, CNBC. I got envious of interviewing people with bigger balance sheets than me all the time, and I realized pretty early on the phenomenon of fake news, and that how journalists spend their time and how they're incentivized to spend their time is not necessarily in pursuit of the truth. So the buy side is the clearest expression of truth seeking, at least for like economically rational people who want to hold on to their jobs. So like any good journalist, I started networking, meeting a bunch of people, got my CFA, and met Cathie and started working for her in 2007, covering technology on these global, well, at the time it was a US thematic fund. And we were heavily invested in what was then kind of the beginning of Web 2. And we had a strong bias towards open source. Like, we were big shareholders of Red Hat. So I learned that, okay, you can be a for-profit company whose job is just to maintain an open source database. That turned on a lot of light bulbs for me. And working for Cathie, she is truth seeking, and she remembers more numbers than anyone in the room. So she can win a lot of arguments. And we were on the right side of a lot of thematic disruption going on. The elements of the strategy that I, disagreed with came down to portfolio turnover, the amount of trading, and I began to learn that that's how you make mistakes, that if you are telling clients you have a 5-year view and then you're trading every quarter, that's a mismatch. And it will eventually be revealed through lack of fundraising and lack of performance. So I left Cathie in 2011, took a detour, worked on the sell side for 10 years, writing research for a Hong Kong-based investment bank, which was then acquired by a Chinese mainland company. So then I really felt this information censorship, like in my professional life, and grew attracted for Bitcoin, as one of the solutions for that. And as I started to formulate how I wanted to invest, once I got back to the buy side, specifically in digital assets, I wanted to take the view that don't just do something, sit there. Like, when in doubt, don't make a trade. Buy the best assets you can buy, earn income from them if you can do so without taking too much risk. Risk manage, but don't trade. And I think that lower turnover approach, if you can pick the winners, will have a much higher batting average over the long run.
During the global financial crisis, I think you guys were also invested in some of the banks going into the crisis.
Yes.
What was that like? Because they went down pretty quick.
So AllianceBernstein at the time had 3 legs to the stool. It had growth equities, value equities, and fixed income. And sitting in those morning meetings in 2007, became very clear that all 3 legs of the stools kind of owned the same stuff: automakers, Lehman Brothers, and that produced this highly correlated negative performance across all the asset classes that we managed, and the firm went through a very tumultuous time. And we were selling Lehman Brothers at $6. I remember that, but I also remember buying Red Hat at a 10% free cash flow yield with that money, or something along those lines. So, it was a very tough time to manage money when you have really smart analysts showing you the intrinsic value of some of these financial franchises, which Lehman was, and you're trying to achieve diversification in a fund that's benchmarked to the S&P, where we want to take some tracking error, and these are 10% tracking error products that Kathy was running, so pretty high, but it's not 50%. You got to own, you got to diversify. And we had a really tough 2008. I think we were down 43%. And, Kathy leaned in, and we had a rip-roaring 2009 and caught the whole rebound. So if you looked at the 2-year performance, it looked good, but volatility adjusted, the sales force is like, it's too volatile for us.
Yeah. Well, now being in digital assets, it's very similar, right? Is people look at Bitcoin and it'll go up a couple 100% and then it'll draw down 80, and just does that over and over again. And so do you think that there will be issues with people wanting to allocate to the asset because of that?
Today's episode is brought to you by Meanwhile. Meanwhile is the world's first licensed and regulated life insurance company built for the Bitcoin economy. Operating on the Bitcoin standard, they do everything in Bitcoin. You pay in Bitcoin. They pay claims to your family in Bitcoin. You take out policy loans entirely in Bitcoin when you need liquidity. Meanwhile, Bitcoin life insurance has redefined what it means to hodl. Protect your family from life's uncertainty in a broken financial system. Build intergenerational Bitcoin wealth while the cost of living skyrockets in dollar terms. Get all the tax and legal benefits of life insurance now in Bitcoin. They are actively binding policies today. Whether you are a long-term Bitcoiner or are just considering it for the first time, a Bitcoin whole life policy could make sense for your wealth plan. Visit their website, meanwhile.bm, to join the waitlist and to learn more about the world's first Bitcoin life insurer. Again, that's meanwhile.bm. Go check them out today.
Yeah, there are issues, and that's why this kind of 1 to 5% allocation makes sense. But the way I like to think about Bitcoin and digital assets, and I'm someone who spent a lot of time in emerging markets, lived in Asia, traveled widely around Southeast Asia. That's part of what gave me conviction in digital assets. The emerging market asset class, emerging market equities, right? People used to put 5 or 10% of their portfolio in there. 40% China, it was 2 years ago. Now it's still 25% China. A lot of American investors don't want that. And with Bitcoin, you can get an asset that has similar negative correlation to the US dollar, but with a lot more upside. And the drawdowns are big, but Bitcoin drawdown was 77% in 2022. Meta stock was just 78% drawdown, and Meta is a 2.5% position in the S&P. Everyone effectively owns it. So the bang you get for your buck with Bitcoin and the negative correlation to the dollar, similar to emerging market equities, makes it very attractive in our view.
Now, what about staking? You mentioned earlier, if you can buy assets and get some income off of them. Obviously, staking is a big part of the crypto ecosystem. It feels like Wall Street's going to be pretty excited about staking if they can get access to it.
Yeah, we'll see if this SEC thinks that staking is a securities transaction. That question maybe needs to be resolved. But when I'm managing assets, I think staking is critical. That dilution is one of the biggest costs of investing in many digital assets, less so Bitcoin, right? Because 94% of the supply is out there. But when you're looking at some of these layer twos where 80% is still left to go, you're going to get diluted. And if you can't stake to avoid that, you're going to underperform. So I'm aggressive, stake the max that I can, as long as I can handle investor liquidity, which is monthly, and then risk manage around the edges.
Got it. And Ethereum or the Ether ETF getting approved, staking will not be allowed, from what I understand. Will that change the interest or the demand for Ether? Like, I feel as if the Ether ETF gets approved and investors can participate in the staking, there could be a much, much higher degree of capital that would flow. Without it, it may be unclear to me why people would buy the asset.
I generally agree with you, but let me start over actually. I think demand for an Ethereum ETF without staking is going to be obviously lower than it would be with staking. I don't think it's permanent that staking will not be allowed. So VanEck has an Ethereum ETP in Europe, and we're currently staking roughly 70% of those assets, and investors are earning a decent yield on that. I think that will come to America at some point, but we are still so early on this asset. Like, most of traditional Wall Street does not know that Ethereum is not just a speculative asset, but it's got real world utility, 2,000 developers working on it every month. There's 3,000 different apps, $3 trillion of value that's been settled across the Ethereum network over the last year. That education process, if we can execute on it, is going to draw interest, whether or not there's some 2%, 3% APY going along with it in the first 3, 6 months, 1 year. I don't think it's going to matter. Over 5 years, I think it will matter.
Now, Bitcoin, I think, is a very clean story. It's digital gold. It's a store of value. When you look out at the crypto landscape, it's unclear that there is anyone else competing with it. It's kind of Bitcoin works or it doesn't. It's very binary in many people's eye. But if there's going to be a digital store of value, Bitcoin will be the winner, right? Ethereum, 5 years ago, I think had a very clear kind of monopoly on it is the smart contract platform. Fast forward to today, Ethereum is one of many, and it feels like it has come under assault from all of these other smart contract platforms that are showing up saying, I'm faster, I'm cheaper, I'm better, I'm, whatever. The name of the game in technology platforms historically has been competition. In money, not so much. Money is more of kind of a maximalist type asset. You get paid in dollars, you save in dollars. You don't necessarily have 10, different fiat currencies in your wallet, right? You're kind of locked in an ecosystem. With Ethereum, what I think is interesting is if the ETF gets approved, the Ether ETF will have a monopoly on the smart contract narrative for some period of time. But if 6 months, 2 months, 12 months, whatever later, you start to get some of these other assets getting approved, very quickly that monopoly on the narrative gets commoditized. And now you have, well, should I buy Ether? Should I buy Solana? Should I name the smart contract platform? On one hand, Wall Street is prepared to go do whatever analysis and, valuation methodology, et cetera, they want to pursue. On the other hand, I really don't know how much of that's being done when people are buying Bitcoin, right? I think that a lot of people just hear the story. They hear it's digital gold. It goes up a lot, it goes down a lot, but over time, it's a great store of value. I'm buying it. Not, it's at $71,000 right now. Is that above or below, kind of the value that I think that I'm actually buying? And so does that shift the investor base when we start getting these other coins more to an institutional investor base where they are going to do valuations and try to understand, kind of where the price is today, versus Bitcoin is almost like the perfect story for institutions and retail to pile into regardless of current price point?
The main levers to our smart contract platform financial models are the penetration rate, what percent of the value being sent around the world is going to be intermediated by these open source blockchains compared to traditional finance. That's lever number one. Lever two is the market share of the smart contract platform. We generally assume these are all call options. There's a lot of winner take all characteristics in digital networks. The top guy is going to get 70%. So that's our base case, market share. And then there's monetization. How much are token holders going to get from every kind of transaction or each unit of value that's locked on the protocol? The first variable has the biggest impact, just the penetration rate. So that's why all these assets are 90% correlated. When Bitcoin goes up, everything kind of goes up. I think that's still going to be true once we have these ETFs. Yes, investors are going to differentiate a little bit, try to figure out who the winner is. And yes, Ethereum will have that monopoly in ETF world until the other products come around.
Tokenization? What are you guys thinking about there? What are you excited about?
The opportunity cost of tokenization is not owning Bitcoin, not owning Ethereum. So if you're resource constrained, and it may sound like we're not, we have 100 billion, but Fidelity has 50 times that. BlackRock has some multiple of that. You have to pick and choose what to do, and I think one of the features of blockchain tech is that the technology itself is commodity, open source. Anyone can spin up a token. It's not particularly difficult to make a a money market fund, a tokenized money market fund, and put it on chain. Question is, will there be any demand for it, and can you make money? And on that, although we've done a lot of R&D, we haven't done anything directly, and we've put most of our resources into owning the open source projects so that if there's $20 trillion of value sloshing around that is looking for an on-chain money market fund, we can quickly spin one up. That said, Jan's son, Nick VanEck, has recently launched the Agora dollar, which is a stablecoin that looks to compete with Tether and is basically starting a price war. So, Tether, these guys are earning $5 billion a year. They keep all the interest for themselves. Distributors don't see any. Consumers don't see any. Now, there's a reason why consumers don't see any is because it makes it a security and introduces all types of friction that would probably hurt Tether, if they tried to do that and fragment their user base. But why not share revenues with partners, distributors, exchanges, businesses who introduce your stablecoin as a means of payment or incentivize platform users to use it as a means of payment? So VanEck will manage the back end of the Agora dollar, which will be short-term debt instruments, overnight repo, these types of things, and then Agora will go out and kick Tether's ass.
What are the odds today that you think Tether could be unseated?
I think they're greater than 25% in the next 3 years.
Mm-hmm.
There are still regulatory questions for Tether, and they don't really have any presence in developed markets. Mm-hmm. So if stablecoins become a thing for payments in Europe and US at your Walmart and Target, I doubt it's going to be with Tether. So I think there is an opportunity. The profit pool is so big, someone's got to go after it.
Got it. When we begin to think about the maturation of stablecoins, there is this question of regulation, but internationally, it seems like people like Tether because it is not regulated by the US. That, and I say not regulated in the sense that they still have to follow rules, right? But USDC, in comparison, is seen as much more regulated. And so I've heard from people in various countries, they say, oh, people here don't like USDC because it's the government coin. Now, again, anecdotal, probably, huge exaggeration in terms of the amount of people thinking about this. But it is this interesting thing about, in the US, we look at regulation, et cetera, especially in the institutional world, as like, oh, it is quote unquote safe. Again, could be debated, may not always be the case, but I think that generally the US has a lean towards if something is regulated, has oversight, it's deemed better. The rest of the world, if it is regulated by the US, specifically because some of the actions we've taken in the geopolitical, conflicts, et cetera, they may be turning off to that. And so how do you think through, you want to be regulated and kind of compete in the greatest capital market in the world, but in some way you may be turning off some of the international users as well?
Yeah, I remember the president of Indonesia a couple of years ago, right after the start of the Ukraine war, and he called out Visa and MasterCard specifically. He's like, we need payments rails that are not run by these American companies that can censor assets. So that was helpful for getting conviction. What you say, that the rest of the world is looking at the other side of the coin here, and they're looking for hedges on U.S. dollar hegemony with Bitcoin, and then the hegemony of the U.S. administrative state by owning what they perceive to be a less regulated asset in Tether versus USDC. So I think that phenomenon is real. And that VanEck's not starting the stablecoin, right? We're going to manage the assets, see what Agora can do, because I do think there are a lot of hurdles.
Yeah, and then also if you look at China, they continue to acquire gold. China and Japan used to buy 22% of all U.S. treasuries. Now it's down to like 7%. Stablecoins have stepped up, and I think they're like the 15th or 16th largest holder of treasuries at the moment. But it's not just like, hey, we may not be buying as much. They're actively diversifying into gold. You have to imagine there will be a country somewhere at some point that says, screw it, let's do the digital gold version as well, kind of additive.
Totally.
Is it concerning for the U.S.? Should we be worried that these countries have seen some of the actions we've taken and they're going to diversify?
Concerning. I think what should be concerning to policymakers is that the rest of the world, much of the rest of the world, doesn't agree with our foreign policy anymore, and they don't agree with how we are spending our budget deficits, right? Whether it's on forever wars or, crazy woke policies in the education system. A lot of them are like, that's a bad use of funds and it's devaluing your money, and we want to own something harder, so let's own Bitcoin. If the U.S. policymakers, if both sides of the political aisle recognize that and we're realistic about what we can do as Americans in the rest of the world, given the fiscal challenges that we have, then I think that would be constructive. That would be a realistic realpolitik, I guess, as it's known. It doesn't feel like anyone's really incentivized to say that in public, so you're stuck in this environment of fake news.
Yeah. My last question for you is, if you were president for a week, what would you do that you think would be good for the country, good for the people, and good for Bitcoin, cryptocurrency, kind of the overall industry?
I like RFK Jr.'s idea to back a portion of T-bill issuance with Bitcoin by starting a Bitcoin reserve fund. I think that would be the most impactful.
Why?
Well, the price would go up a lot, and it would be a recognition that the current monetary regime is unsustainable and that the bad points outweigh the good points at this point.
Mm-hmm. And the thought process would be you only have to do a little bit because as the dollar price goes up, you could eventually get to some significant amount of backing over time.
Exactly.
Yeah. What about a speculative attack? Just print $1 trillion. We won't even notice based on how we spend now. And
government doesn't declare wars like that. I think that's just a too aggressive tack, just too antagonistic. It's like starting a war before you're attacked.
But it's a war on an asset that can't fight back, right? In terms of if the U.S. government, we'll play a little hypothetical game. The U.S. government printed $500 billion. Without joking, it would be a rounding error in some cases to what they're already spending. If they then went into the market and began to buy Bitcoin, yes, the price would appreciate. But let's say that the purchasing of that Bitcoin could end up with them acquiring 20% of all Bitcoin in circulation. There's maybe 30% that's free floating, turning over. It may take a while. The price will go up. People will sell. There's a bunch of assumptions that in there. But 10 to 20% they probably could acquire. And they were the first country to do it. To me, that feels like it would be a significant advantage going into the future, holding 10 to 20% of all Bitcoin in circulation for a long period of time. And if the cost is $500 billion, that's a big number. But it's not even 1 year, deficit. And so it feels like we are actually incentivized to do something like that. Now, again, we may not come out and issue a press release that we're going to start buying Bitcoin today, whatever, right? But, going down this path and saying, look, maybe we should be buying $1 billion a day and do it for 2 or 3 years, right? we see with the ETF inflows, like the price will go up, but it's not going to send it 5x, right? In terms of what we're seeing now. And for $500 billion, it's such a binary thing that if, Bitcoin does become the global store of value, to own 10, 20% literally is the difference between, extending the empire or potentially being on the wrong side and somebody else, having that advantage.
Yeah, your question was president for a week, not dictator for a week. So, I love your idea, but I think that 1% of it would do enough towards reintroducing the idea in people's minds that your money needs to be tied to the productive resources that you have in your economy. It can't just be about the printer. And Thomas Edison had the idea 100 years ago to make the US dollar backed by a basket of commodities. Introducing Bitcoin in even a tiny measure into the plumbing of our financial system and how T-bills are issued, I think would do that for a lot of people and make a lot of sense and incentivize America to remain a low-cost energy leader, right? There are no energy poor rich countries, so you have to be an energy leader. I think Bitcoin's going to help with that over the long run.
Yeah. There's a lot of people who don't know that, though.
Yeah.
Hopefully that will change. All right. Where can we send people to find research, find you on the internet, or learn more about VanEck's products?
So on VanEck.com, if you click on digital assets, you can subscribe to get all of our research. We've done bottoms-up models on the largest smart contract platforms. Follow me on Twitter, Matthew_Sigel, and the VanEck Twitter account, VanEck Intern, also distributes all of our stuff.
And then as a special treat for the people who listened all the way to the end, what is your bullish case for Bitcoin, ETH, and Solana right now out of the research?
Yeah. So out of the research, the official price target on Bitcoin is 325,000, which is half the market cap of gold. We're going to have some new research soon that incorporates the layer 2 opportunity and should send the price target higher. For ETH, new report dropped today, 22,000 per coin. We estimate that the network is going to produce $70 billion of free cash flow by 2030, 33 times that. And then Solana, our base case was $300. That base case is obsolete now because we used a lower market share number for Solana because of some of the technical debt. And they've made a lot of progress. So bull case on that, 3,000.
365, 22,000, and 3,000.
Yeah.
The people who waited till the end, they're going to be happy. All right. We'll do it again in the future.
Thank you.